Perfect. There we go.
Yeah, perfect. We can see the screen now perfectly. Okay, Federico, you can start.
Okay, perfect. First of all, welcome to everyone. Today we are going to talk about income taxes and sales tax. Um, First, let me do a quick intro for Lazo. Lazo is the trusted AI copilot supporting founders in scaling their businesses intelligently. Lazo is the leading provider of AI-driven operational services for startups, including legal, accounting, tax, payroll, finance, and fundraising support in the US. Um, so currently, any new client can sign up for free at lazo.one and obtain detailed information and personalized recommendations from a database of over 270K venture capital investors. So as Facundo and Ruth said, I'm Federico, I'm the tax manager at Lazo, and we had Tal, that is a CEO at Complyt. So let's start with income taxes, where there are two things that most funders are very clear about. Startups born worldwide are forced to think globally to increase and achieve the exponential growth necessary to attack venture capital. And B, the US VC market is the most important in the world. So the combination of both conditions are more than obvious and logical, right? So many startups want to offer world-class digital solutions to the world, and we always have the ideas, the desire, and the necessary talent to achieve it. However, we do not have enough funds to support our exponential growth, which is the most startups seek to enter the US VC market as soon as possible. So faced with this, we urgently need to think about and develop a structure that is 100% compatible with our business model. It is important to note that the US has one of the most complex tax systems in the world. So it is crucial to choose the most appropriate legal structure once the decision to enter the US market is made. Well, here we have to be clear, very clear about income taxes in the US. These taxes are usually paid at three levels. First, we got the federal level, which is nationwide, where the tax return is filed with the IRS. That is the regulatory office. Then we have the state level that, depending on the state in which you are operating or you are registered, you will need to file a specific tax return for the state. And lastly, but no less important, there are states with significant cities that regulate activities. This is the case for New York, for example, that you got New York City to pay your taxes at local as local taxes. So in that cases, you will need to file a tax return for that city. And something else that is important to highlight, that although it is the same tax, it has different rates and it's paid to different agencies. So in fact, it's not the same tax. Well, going forward, we have two important groups to delve into. One side, we have direct taxes, which are those that a startup must pay directly to the authority that imposes and controls them. A clear example for this one is the income tax that we were talking about, or property tax, for example. In these cases, depending on certain amount and a certain rate is applied, and you will need to deposit that taxes directly to the controlling agency. Then on the other side, we have indirect taxes, which are those that a company must charge to direct customers, and then remit that collection to the corresponding tax authority. Here we had the example of sales tax that Tal is going to explain more in a few minutes. Well, going forward, we can see the different types of company that can be established in the US. First of all, we have the single member LLCs that are sole proprietorship companies, where the owner can be a resident of the US or a foreign owner. Next, we have multi-member LLCs that are also known as partnerships, where the partners can also be American residents or foreigners. For these two cases, it is important to note that these structures, the company as an entity, is not the one that must pay taxes. These companies are described as pass-through entities. So in case taxes are applicable for it, these taxes will be sent through each partner's tax return and paid directly to the IRS through these partners. Then, on the other hand, we have the corporations, which are divided in two groups, C Corps and S Corps. The first ones are the classic American corporations, where the shareholders can be residents or foreigners. And then the S Corps have a special treatment that are only valid for American residents. Well, the question here would be, where should I start my company? Well, usually most of funders choose Delaware to incorporate the company in the US, that this is a state where you can easily start your company. We will talk a little bit more about state in a few slides. Well, in the following slides, we will talk about how each structure needs to pay their own taxes. So in this one, we can see a case that we have an LLC single member that the owner is an individual. So as we mentioned before, the business income tax for this company would be 0%, and it will be transferred to the owner that in this case is an individual. So depending of the net income that this company needs to pay, it will be transferred, and it will be between a 10% and a 37%, depending the scale. In the next one, we can see a similar case where the LLC is owned by a business. So in this case, the business only pays 21% of the income taxes. So it will be transferred to the business that is the owner and then paid to the IRS. In the next one, we can see a partnership with three different owners. In this case, same situation, you will not pay anything for your LLC, but that income will be transferred to each owner. So in the case of those that are foreigners, they will need to pay their own taxes in their countries. And the one that is American resident should be paying their apportionment between at 10 and 37% of the scale of each of that income from the business. The next one, the C corporations, the classic ones, they have just one only rate, that it's 21% of everything they got as net income. And the next one, that is S corporations, it's a similar situation with a partnership, but the difference here is all of the owners needs to be American citizens. So same situation, the amount will be transferred to each one, and they will pay for their apportionment in their business, and between a scale of 10 and 37% again. Well, going forward, of course that this reporting of foreign companies have some penalties. So let's talk about Form 5471. In this case, if your company has a foreign subsidiary, you will need to report Form 5471 for each of those that you have more than a 10% of ownership. Then, if your company is owned by a foreign company with 25% or more, your company will need to report a Form 5472 for each of those owners. And finally, if you have any bank account related to your company in a foreign country that their funds have been more than $10,000 within the calendar year, you will need to report the FBAR. Then the penalties attached to each form. Failing to file 5471 would be a 10K penalty for each one. Then failing to file a 5472 would be $25,000. And finally, if you fail to file the FBAR report, the penalty would be around 100K or the 50% of the highest account balance for it. This depends if the penalty is considered a criminal penalty or civil penalties. This will be on the IRS. So now we arrive to the state income tax. As we said at the beginning, when we saw the differences between federal, state, and local, this tax filing will always depend on the state where you have presence or are registered in. So you have some states like California, New York, Texas, Pennsylvania, Florida that requires a state level tax return that comes from the federal one. So you will be reporting the federal and then putting some amounts with a certain apportionment to each state. So if there are no tax to pay, it must be if there is tax to pay, it must be deposited with the control agency of each state. Then let's see what happened in states like Delaware. As I mentioned a few slides ago, the state of Delaware is the most chosen by entrepreneurs when forming their company in the United States. This is because it has fewer regulations than other states like New York and California, and requires less fiscal compliance. I mean, this translates not to filing an annual tax return. For example, in case of Delaware, you only need to pay the franchise tax, which is equivalent to filing a tax return in another states. So in this case, we are in a state where it's much more simple, which is simpler to keep the company active and functioning. Well, we have seen everything related to income tax. So Tal, your turn.
Okay. Thank you, Federico. Yeah, so I'll share the screen so I can control it. 1 second. You can see my screen? Yeah. Perfect. So first, nice to meet you all. Thank you for joining again. And thank you for the first part, Federico, about income tax. It's very interesting how things can be complicated in the US. And with the sales tax, things can be even more complicated. So just to introduce myself, my name is Tal Bar David, and I'm the CEO of Complyt, which is a platform to manage your sales tax obligations in the US. And what we will cover in the next 10 to 15 minutes is the concept of sales tax, which is the indirect tax that there is in the US. We're familiar with the VAT and things like that, but in the US, it's called sales tax. So just to give you kind of overview about sales tax, currently, sales tax is the indirect taxes that you should collect from your customers every time that you do a transaction with your customers in the US. Basically, there are 5 states with no sales tax at all, and we call those states the nomad states. So it's New Hampshire, Oregon, Montana, Alaska, and Delaware. And it's important to understand that this is basically the channel of the state to finance its activity. So they are very eager to make sure that all businesses are collecting sales tax properly. So basically, I think let's start with a basic question, because I guess each one of you has customers in the US, and then there is a question, when and why should we collect sales tax from our customers? So in order to answer this question, we need to determine whether I have a sales tax obligation. And there is 2 main questions that you need to ask yourself every time in order to answer the sales tax question. Let's take an example that I'm a company located in Buenos Aires, even in London, in Europe. So every time I'm issuing an invoice to a customer in the US, I need to ask myself whether I have in the state where the customer is located, let's say Michigan, whether I have a nexus in Michigan. We will cover nexus very shortly. Then the second question, whether my product or services are taxable in Michigan. And if I have yes on both questions, that I have nexus and my product is taxable, then I need to collect the sales tax. Now, in terms of the tax rate, it's also very complicated because every state has different rules and different regulations. in terms of the nexus, in terms of the product taxability. So let me give you an example. So if I'm selling something like software to customer in New York, so in New York, SaaS is subject to sales tax. However, if I'm selling the same product to someone in California, so SaaS is exempt in California, so I don't need to collect the sales tax. So every transaction needs to analyze it, whether you need to collect sales tax or not. So let's break down those two type of questions. What is nexus and how we determine the product taxability? Nexus can be established either one of those two ways. That I can have physical nexus and I can have economic nexus. Physical nexus, that means that I have offices or employees or warehouses in the state, something physical, and then can trigger a physical nexus in the state. If I don't have any physical presence in those states, I might still have economic nexus. Now, economic nexus can be established usually as a threshold of activity in the state. Most states' threshold is $100,000 a year or 200 transactions. So those are two types of nexus that can be established. Now, after I understand if I have physical nexus or economic nexus, I'm going to the second question, which is the product taxability. Now, usually it's yes or no question, but sometimes it can be more complicated. So let's say I'm selling SaaS. So as I said, there are some today. I think 23 or 24 states subject sales tax on SaaS. For example, professional services usually exempt from sales tax, but usually tangible items like something that is physical, usually subject to sales tax in all of the states. But again, each state choose when and what type of products and services should be subject to tax. Now, so let's conclude. So every time I'm doing a transaction in the US, I need to look where is the customer located and to ask myself, either I have nexus, physical or economic. If yes, I need to check whether my product or services are subject to tax. And then if yes, I need to collect the tax. And again, the tax rate is not easy as well. The tax rate is being determined by a specific address because the sales tax rates are billed by state rate, city, county, and sometimes municipal. So if I'm doing a transaction, and zip code is not enough accurate, because in the US with underneath one zip code you can find few jurisdictions and with different tax rates. So for example, if I'm doing a transaction, let's say with someone in Manhattan, then the tax rate would be 8.875. But if I would do the same transaction with someone in Brooklyn, basically it would be 8.65. So it's very important to make sure that you are collecting and taking the right address. Usually it's supposed to be by shipping address in order to calculate the tax. Now, you have a kind of a quick chart about how you can determine whether you need to collect sales tax, which is summarize of what we discussed. Do I have any sales in the US? If yes, if I have any employees on those states, yes, I have nexus. No, so I'm checking as well whether I have economic nexus. Now I know where do I have nexus. Second question, as I said, whether my product or services are taxable or not. If yes, I need to apply sales tax. Now, there is another nuance to understand that I want to add to this slide, is the type of your customers. Some customers and some transactions are exempt from sales tax. Let's say in the US, if you're not dealing with the end user, so sales tax is not supposed to be applied. And I'll give you an example. Let's say I'm a company, let's say Adidas, okay, and I'm selling shoes to someone direct on the website to someone in Michigan, obviously this transaction goes to the end user and consumer and going to be subject to sales tax. However, when Adidas selling their shoes to Walmart or Target or any reseller, this transaction is basically exempt from sales tax because Walmart is not the end consumer. He will show that a certificate that called reseller certificate that says, listen, I'm not the end consumer. When Target or Walmart or whatever will sell the shoes to the end consumer, then on this transaction there will be some sales tax. So it's very important that if you are working through any distributors or any other channels that might be exempt, it's fine. You don't need to collect the sales tax as long as you are getting from your reseller a reseller certificate that claims that you don't need to collect sales tax from them. There is other types of exemption, like, for example, a non-for-profit organization that usually have an exemption, but don't rely on what they are saying. Always ask to get a certificate in order to justify why you didn't collect sales tax. I see there are some questions, but I will answer at the end. So let's now discuss, so we discussed about how to determine whether we need to collect sales tax, yes or no, and what is the tax rate, but what happened now, there is still a huge thing about the compliance side. So we understand that we have Nexus, we collected the taxes, we registered in the state for sales tax to get the sales tax permit, and we collected the taxes. Now, upon the registration, the state will tell you what filing frequency it required from you. Sometimes it will be monthly, sometimes it would be quarterly, and also annually. And then at the end of each month or quarter, you will need to report on all the taxes that you collected, because eventually you are a pipeline of the state. So you are holding the money for a certain amount of time, and then you remit it to the tax authorities upon the due date of the filing. And again, you need to file, it's not a federal level, you need to file your sales tax returns in each state that you are operating and you are registered in. Yeah, if you're confused, I understand the confusion, but thanks, today we have automation that can do for you, like a Complyt. We are sitting on platforms, ERPs like QuickBooks, NetSuite, Stripe, Shopify, whatever type of transaction platform that you are using. So the platform can monitor your obligation, does for you all the calculation in real time, and remit and filing the sales tax returns on your behalf. I want to say something about mainly for startups, and it's important to mention that sales tax is something that it's better to manage from the beginning, because eventually, if you're not collecting tax when you need it, and a few months later, or maybe a year later, this thing pop up, even on an audit or a due diligence, you won't be able to go back to your customers and ask from them to pay the sales tax when they were supposed to. Eventually, it's going to go out of your pocket. So with the sales tax, it's better to manage your sales tax obligation from day one, from you have the obligation, and not to wait too long. It's fine to wait a few months to see how your operation expanding in the US, but don't wait with it too much, because there already be some transaction that should be subject to sales tax. And if you're not collecting that from the customer, you're going to pay it out of your pocket. So that's something that we see in practice with a lot of startups that say, okay, I will deal with the sales tax or income tax eventually. But with income tax, it's okay, because you can do some planning and to think how you can postpone the tax. However, with sales tax, you don't have any motivation to do a planning, because this is money that doesn't goes out of your pocket as long as you manage it properly. If you don't do it properly, then you're going to pay it from your pocket. So that's about sales tax, very high level. I see that there are some questions about sales tax, so I'll answer that, and then I'll address one more thing about economic nexus. So it depends on the state. Like every time you have a question about sales tax, the answer is depends on the state. Economic nexus thresholds are usually $100,000 or 200 transactions a year. The period can be either, it depends on the state, but it's usually previous calendar year or current calendar year. Meaning, let's say I did a $10,000 transaction in Michigan and another 20 and another 30. Once I hit the threshold of $100,000 transaction, from that date and on, I have the nexus. And it's not affecting the previous transaction, only going forward. And in terms of what counts into those $100,000, so it depends again on the state. Sometimes it's the gross sales. Sometimes it's only taxable sales, so they're ignoring resellers, which are not taxable. So this is how you calculate the economic nexus threshold. Another thing about the economic nexus is that it's important to know that some states also have a bit different threshold. For example, New York has higher threshold of $500,000. Same with the California. Alabama has $250,000, but most of the states are $100,000 or 200 transaction. Now, the last thing that I want you to say about sales tax, because I know there are a few companies in here on the e-commerce side that if you are selling through different channels, okay? So if you are selling through a marketplace like Amazon, so Amazon does the sales tax on behalf of the seller, so you are covered. But usually there is only one channel that you are selling through Amazon, and then you have other channel, either B2B or directly from your website or Shopify, whatever. So please pay attention that maybe you are selling through Amazon, and this is something that's being covered by Amazon, but the direct sale that you are doing with your customers are still need to be monitored and calculated with taxes. And the last question that I see here is about address validation. Yes, it's very important to have an address validation because, as I said at the beginning, sales tax should be calculated based on address. And if the address is wrong, so our system fix that as long as it's something reasonable. So yes, the answer is yes. Also, we see another practice in some type of businesses, like gaming or companies that doesn't want to take all the details from their customers to avoid any friction on the sale. It's okay to take only zip code, but it's important to understand that it's not 100% accurate, but it's better than nothing. So that's what I wanted to say about the address validation. Let's see if there is any other question about sales tax. 1 second. Yeah, I see the chat. I see that. Yeah. So let me just summarize, because I see that we are short on time. So sales tax, you need to check on every transaction if you need to collect the sales tax based on the parameters that relevant in each state, nexus and product taxability. And if you are not sure about where you are, if you are above the threshold or not, so obviously please reach out to us or any other consultant or Lazo that can help you to investigate what is your status with the sales tax. So that's from my end. I see there is another question. Do you calculate borough tax in Alaska? So in Alaska, it's a weird state. Okay, it's a weird state because they don't have sales tax on the state level. However, there is sales tax on the city level, and the answer is yes. Federico, you have anything else that you want to add?
No, I think I covered everything from income tax. So if anyone has any question, I'm delighted to reply, but let's see.
Okay, so obviously we will send the presentation later on if you want to cover or to ask anything. In the presentation, you will see some links to book a meeting with our professionals, either with Lazo or with Complyt, and we'll send you also, I guess, a recording of this session. And if there is any other questions, so thank you everybody for joining us. It was a great to see you, and we are here for you for anything you need in the future. And thank you, and have a great day.
Thank you all.
Bye bye.
Bye bye.